All right, welcome back for another deep dive. Today, we're looking at all the GameStop action and discussions from Reddit, specifically r Superstonk and RGME.
Sounds fascinating.
What is?
Yeah.
Especially since you know your way around the markets. We're going to skip all the intro stuff
Right.
and jump into the deep end.
Love it.
So things like the borrow fee vanishing
Oh.
briefly,
Okay.
DFV being silent, and even theories about like repeating fractal patterns.
All right. Those are some seriously interesting topics. It's amazing how GameStop still has everyone captivated,
Absolutely.
especially retail investors.
Yeah, so let's start with that whole borrow fee disappearing thing.
Okay.
Users on our Superstock saw that on November 13th, the borrow fee for GME briefly hit 0%. Yeah, and so some people are saying this is a sign of a short squeeze coming,
Right.
but then others are saying it's probably a glitch or even something, intentional.
Intentional. How so?
Maybe to encourage shorting.
Oh, interesting.
Yeah.
Well, a 0% borrow fee that's pretty rare when it comes to short selling.
Right.
Usually those short sellers, they have to pay a fee to borrow shares, which of course impacts their costs and risk.
Sure, of course.
If it suddenly drops to nothing, that could mean there aren't many shares available to borrow,
Interesting.
which might mean there's a lot of demand for the stock.
Oh, I see.
But you also got to think about how these fees are calculated and displayed.
Yeah, that's true.
Glitches or data problems can give off the wrong signals.
For sure. And speaking of different interpretations, users over on RGME actually had a different take on that whole 0% fee thing.
Oh, really?
Yeah, they're suggesting it might have been a placeholder.
Placeholder.
Because all the available shares were, already borrowed.
Oh, okay.
And they point to the fact that the fee went up after that, and the number of shares available actually decreased.
Huh. That makes sense.
Right, so it kind of seems like it supports what they're saying.
Yeah, it really emphasizes how important it is to really get where the data is coming from and understand any limitations when we're looking at short selling activity. I mean, if the borrow fee can be changed just because of how many shares are available, then that raises some questions about, how transparent and accurate this metric really is for figuring out the short selling pressure on a stock.
Definitely adds more to think about.
Yeah.
Speaking of mystery and intrigue, let's move on to the big question.
Oh.
DFV, the legend. Deep fucking value.
Ah, yes. The man, the myth, the legend whose early GameStop investment has become almost mythical at this point.
Exactly. And he's been so quiet lately. No posts, no updates, nothing. And over on Superstock, people think this silence means something big is coming.
Oh.
They're even bringing up one of his old memes.
Which one?
That bear beware, you're in for a scare.
Right.
They think he's still holding and just waiting for the perfect moment.
It makes sense why everyone's so focused on what he's doing.
Right.
I mean, for a lot of retail investors, he's a symbol.
Definitely.
He shows it's possible to challenge Wall Street and win big.
Yeah.
So what he does or doesn't do
Right.
carries a lot of weight, especially with GameStop.
Yeah, it really affects how people feel about the market.
Absolutely. From a behavioral finance point of view, DFV not saying anything, it could be strategic.
Oh. How so?
Well, think about it. He keeps everyone guessing, and he doesn't tip his hand to those shorting the stock. It creates this feeling of, anticipation, uncertainty.
Yeah.
And that can really make the price go up and down even more.
It's like he's playing poker.
Exactly.
Keeping his cards close.
Yep.
While everyone's trying to figure out DFE, though, there's another thing people are talking about.
Oh, what's that?
This possible link between, of all things, GameStop's price and Bitcoin.
Interesting.
Yeah, one user on our Superstock said they saw GME drop like 10% right when Bitcoin dipped, about 2%. And now there are theories about market manipulation or some, secret connection between the two.
I mean, it's natural for people to look for connections and patterns,
Right.
Especially with, volatile stuff like GameStop and Bitcoin.
For sure.
But you got to be careful with these correlations. While it's possible for unrelated assets to move together because of, say, overall market trends or big economic news,
Yeah.
or even just how investors are feeling, to say there's a direct link, you need some serious analysis and proof.
So you're saying that a 10% drop in GameStop is all because of a 2% dip in Bitcoin. That's a bit of a stretch.
Yeah, I'd say so without more evidence.
It's a good reminder that just because you see a pattern doesn't mean it's a guaranteed trading signal.
Absolutely.
Speaking of patterns, though, there's this theory on our GME that caught my eye.
Oh, tell me about it.
It's about GameStop's price. maybe following this repeating fractal pattern
Fractal pattern.
based on Fibonacci sequences.
Okay.
This user found 2 time periods in the GME price chart that look similar. But the second one is bigger, both in price and how long it lasts. Using Fibonacci sequences in the market is pretty fascinating.
It is. It's been around for a while.
Yeah.
The idea is that these ratios, you find them in nature a lot.
Right.
Well, they also show up in how market prices move.
Oh, okay.
Traders use Fibonacci stuff to see where the price might change direction or keep going.
That makes sense. So what does this user say is going to happen
Wow.
with GameStop?
They're saying some pretty big things.
Oh.
Based on their Fibonacci calculations, they're predicting certain price peaks and dips, leading up to a big price jump in early December 2024.
Wow.
They even have a timeline with price targets for specific dates.
That's pretty bold.
It is, and while those predictions sound exciting, it's important to remember that technical analysis has its limits.
Yeah, especially with GameStop.
It's so unpredictable.
So even if those Fibonacci patterns look like they might be telling us something,
Right.
they're not a crystal ball.
Ex-
The company's fundamentals, what's happening in the industry, the whole market, that all plays a bigger role in where the price goes long term.
Exactly. Technical analysis can be a good tool,
Right.
but you need to use it alongside fundamental analysis and really understand what you're investing in.
So with GameStop,
Especially with a stock as speculative as GameStop.
you're saying just relying on math patterns to figure out where the price is going
Right.
could be pretty risky.
It could. There's always a new theory with GameStop, but there's one more thing popping up on RGME that we should talk about.
What's that?
The possibility of a gamma squeeze.
Oh, I've heard that term thrown around, but can you explain it?
Of course, a gamma squeeze is when a stock's price jumps up really fast because of options activity.
Oh, wait.
It happens when a lot of call options, those bets that the stock price will go up,
Right.
become in the money.
On the money.
That just means the stock price went higher than the strike price of those options.
So they're making money.
Yeah, so they become profitable to exercise. And this is where market makers come in. They're the ones who make options trading happen.
Right.
And they got to hedge their risk.
Right, of course.
So when lots of call options are in the money,
Yeah.
market makers are forced to buy shares of that stock.
To cover their losses if those options get exercised.
Exactly. And that buying can push the price up even more.
So it just keeps going up.
It's like a snowball effect.
And people on RGME think this could happen with GameStop.
They do. They say there are a lot of in-the-money call options that are expiring soon.
So this gamma squeeze is a real possibility.
It's possible, and it could make the price go crazy in the short term. But there are some things that need to happen for it to work.
Like what?
First, you need a bunch of call options near the current stock price.
Okay.
Second, those options need to be close to expiring.
Got it.
And third, you need enough people buying the stock to keep the price moving up.
So if even one of those things isn't there,
The gamma squeeze probably won't happen.
so even if the options data looks good, it's not a sure thing.
Nope, market makers are smart.
Yeah.
They have ways to manage their risk and maybe even stop the gamma squeeze from happening.
So trying to predict exactly what will happen with options
Especially with GameStop.
is really hard.
It is.
So the gamma squeeze is interesting,
For sure.
but it's just one piece of the puzzle.
Exactly. You can't just look at technical indicators or options data when you're making investment decisions.
It's more complicated than that.
You need to know the company inside and out, the competition, what's going on in the whole market.
Right, it's all connected. Man, every time I think we've figured out GameStop, something new pops up.
It's true. It's like a never-ending story.
We've talked about the borrow fee disappearing, DFV being silent, that possible Bitcoin link,
Fibonacci patterns.
gamma squeezes. It's a lot.
It really is a whirlwind of theories and speculation and technical analysis.
But we got to step back
Right.
and ask what it all means for investors. So for our listeners, the finance experts out there trying to understand this GameStop roller coaster, what's the key takeaway?
Well, I think it shows how fundamental analysis, technical analysis, and just how the market feels.
We'll come together,
Yeah, they all mix together to create these wild price swings.
which is what attracts everyone to GameStop.
The veterans and the newbies.
It really shows how important it is to have a balanced approach to investing.
Absolutely.
You can't just rely on charts or what people are saying on social media.
Nope.
You got to dig deeper, know the company, the competition, the whole market.
Exactly. And even then, GameStop is still high risk, high reward.
Yeah, you can win big.
But you can also lose big, and it can happen fast.
Definitely not for the faint of heart.
Ah.
So as we wrap up this deep dive into the world of GameStop, What's the one question our listeners should be thinking about as they do their own research?
I'd say the big question is GameStop's price right now based on what the company's actually worth and what it might do in the future? Or is it just because of speculation and how people feel about the stock?
That's a really good question.
The answer to that will tell us if GameStop keeps going on this crazy ride or if it settles down.
That's a great point to end on. As always, do your own research, weigh the risks and rewards, and make smart choices that fit your goals.
And remember, the market is always changing.
So stay informed and be ready to adapt. Happy investing, everyone.